What's up, traders? Is it time to sell stock of the cruise lines? Well, if you were trading last year, right around the COVID crash and after it, lots and lots of traders on social media were making cruise lines into a meme stock. That's because they crashed tremendously, and a lot of people saw this as opportunity to catch these at lows because surely the market would come back. That's not to say that everyone thought that. There were plenty of people that thought that these cruise lines were going to go out of business. No one was going to take a cruise again. Everyone was going to be sick with the virus, blah, 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 blah. Well, here we sit a whole year later. Can't believe we can say that now. And the cruise lines have come back. And this is actually something that I talked about a few weeks ago on CCL when I posted in TradingView a trade that I took in CCL. Let's take a look at that and why I did. So this was a key example, a textbook example of how I look for a 50% retracement that also matches up with the Ichimoku cloud. And from that level, this was on January the 27th, it rocketed up. Now, I remember January 27th, that's when we had all that short sale squeeze gobbledygook, which had nothing to do with CCL, but those were great opportunities to buy on that dip that day. Big day, January 27th. So this was an opportunity to buy at the 50% retracement, also based upon the Ichimoku cloud. We'll see what that looks like again. So go down to the daily here. I'm going to add in my indicator where we just showed our 50% retracements, and then we're going to also use Ichimoku. And so right here was that level that we bounced off of, and up it went. And so pay close attention to this pattern right here, the Ichimoku cloud, and how when it goes flat and price pulls back to it, you can also confirm that it is a 50% of a major move right there. And that can set you up with a great trade. Now, this was a long trade up to this point. Let's look at what some of the others are doing, because this is what prompted me to make the video. So NCLH, another cruise line, very similar pattern. They're all related. But if we zoom out to the longer term perspective of what the cruise lines are doing, we look at the weekly. On the weekly, we're doing the exact opposite. Now, at this point, from last year's COVID crash, we've come back to the 50% retracement of that down move. And we're hitting what could be called right now a resistance. It is the 50% retracement of the move. Now, that doesn't mean that it's going to respect it. In trading, anything can happen. If it follows the pattern, the reverse of what CCL did on the daily, then we would expect it to hold here and come back down. It could do any number of things. It could also come up here and then perhaps pull back to this level, and then onward it may actually go forward, and then it could get full bullish. That's why this is such a key level when you're looking at Ichimoku or 50% retracements. It's a resistance that you really need to pay attention to, because that can be broken and come back to retest it, and then it can go the other way. So really important right now, and this is why I'm making the video, for folks that are either in cruise line stocks or looking to play them, watch over the next few weeks what happens to the cruise lines at the level it is right now, because everyone's seeing that the market has been going down. Tech stocks have been dragging everything down. I made a video about why that is, sector rotation. But people are still pretty bullish on travel returning now that the virus is starting to abate and people are starting to feel better. Animal spirits, as Bill Ackman calls it. So, again, pay attention to this level. Doesn't matter what you're playing, all of them are somewhat correlated in a way. There's one more final thing I wanted to add to this, and this is more of a kind of an esoteric interpretation of price action. But if we take everything else off and we simplify it and we look at the price action as a whole, let's just jump back to before COVID and see what they were doing. Well, if we look at the way price was moving from about 2018, the beginning of 2018, it was in a pretty steady decline. It come up and topped out in about January 2018, and pretty much all of the cruise lines were in a somewhat of a decline. So if you really kind of chart that trajectory, it was on its way down. Now let's look at it if we take this off. So the COVID crash definitely accelerated that, which was already weak. But now, as price has come back up, what has it basically done? It's basically returned to the mean. And that's what a lot of stuff does. A lot of stocks, a lot of instruments have a tendency for mean reversion. And so when you see someone crash like this, definitely don't get scared, because it has a tendency to. This is the same thing that real estate did in 2007. Got a little too hot, came back to the mean. So this is another interpretation of why here may be possibly a resistance. So hope this is valuable to people that are interested in these industries. Trade wisely. We'll see you in the next video.